Hey tech fans, are you ready for a roller coaster? Baidu, the Chinese search giant, just dropped its Q4 earnings, and the numbers are, well, a mixed bag. Revenue is down 2%, hitting 34.12 billion yuan. That's about $4.69 billion US. Now, analysts were expecting a bit of a dip, but this still stings. What's behind the downturn? Let's dive in because this isn't just about one quarter. It's about Baidu's future in the AI race. This is huge. The world is watching Baidu's next move. Can they pull off a miracle? The big culprit? Advertising. Baidu's online marketing business, excluding iQIYI, took a 7% hit, landing at 17.9 billion yuan. Why? China's economy is sputtering, especially for small businesses. They're tightening their belts and slashing ad spending. Think about it. If you're a small shop owner struggling to make rent, are you really going to invest in online ads? This isn't just about Baidu. It's a reflection of the broader economic pressures in China. It's like a canary in a coal mine, folks. Are things really as rosy as the government claims? We need to dig deeper. This is getting intense. But hold on, there's a silver lining. Baidu's AI cloud segment is booming, growing by a whopping 26% year-over-year. This is where Baidu is betting its future. They're pivoting from a search engine to an AI powerhouse. It's a bold move, but is it enough to offset the advertising losses? The AI cloud is becoming Baidu's secret weapon. This is a game changer. Will it be enough to save Baidu from the ad slump? Stay tuned, because this is where things get really interesting. Now, let's talk about Ernie. Baidu was one of the first to jump on the ChatGPT bandwagon, launching its own large language model. They even claim that the current Ernie 4.0 version matches OpenAI's GPT-4. Bold claim, right? But here's the problem. Ernie is struggling to gain widespread adoption. The competition is fierce, especially from Chinese startup DeepSeek's R1 model. It's a battle royale in the AI arena, and Baidu is fighting for its life. Can Ernie truly compete with the global giants? Or is it just another Chinese copycat? The AI world is watching with bated breath. Don't miss what's coming next. So, what's Baidu's plan to fight back? They're open sourcing their next-generation models, offering premium chatbot services for free, and even integrating DeepSeek's technology into their products. It's a multi-pronged attack. They're trying to democratize AI, hoping that more users and developers will flock to their platform. This is a risky move. Can Baidu outsmart the competition? The stakes are incredibly high. Will this desperate gamble pay off, or will it backfire spectacularly? Baidu isn't just building AI for fun. They want to make money. They're integrating AI into existing apps like Wenku and selling AI services through their cloud computing. They're trying to turn AI into a revenue stream, but it's a tough sell. The question is, will businesses and consumers pay for Baidu's AI services? This is the ultimate test. Can Baidu translate AI hype into real profits? This is where the rubber meets the road, folks. The pressure is on. The good news? Baidu's Ernie platform is seeing massive user engagement. It handled 1.65 billion daily user queries and interactions in December, up from 600 million in August. That's a huge jump. People are clearly using Ernie, but are they finding it valuable enough to stick around? Engagement is great, but it needs to translate into revenue. This is a critical metric. Is Baidu truly building a loyal user base, or is it just a passing fad? Now is the time to pay attention. Let's be real. Baidu is facing some serious competition. OpenAI's GPT models are dominating the global market, and DeepSeek is making waves in China. Baidu needs to differentiate itself. They need to offer something unique that sets them apart from the crowd. This is a crowded market. Can Baidu carve out its own niche? What is Baidu's superpower? What makes it different? If they don't find one, they're doomed. It's do or die time. And let's not forget the elephant in the room. China's slowing economy. This is impacting everyone, not just Baidu. Small businesses are struggling, and consumers are tightening their belts. The economic climate is harsh. Can Baidu weather the storm? This is a test of resilience. The global economy is a fickle beast. Is Baidu strong enough to survive the downturn? This is a critical question for all tech companies operating in China. Baidu has been returning capital to shareholders, repurchasing over $1 billion of shares since Q4 2024. This can boost investor confidence, but is it the best use of their cash? Some argue they should be investing more in R&D. It shows they believe in their company, but is it a short-term fix or a long-term strategy? This is a complex decision. Are they sacrificing future growth for immediate gains? Let's analyze the long-term implications. Baidu is also touting its ESG efforts, earning a spot in the S&P Global Sustainability Yearbook and being recognized by Forbes China. This is important for attracting socially conscious investors, but is it just greenwashing? Are they truly committed to sustainability, or is it just a PR stunt? This is a growing trend. Investors want to see companies that are environmentally and socially responsible. But is Baidu walking the walk, or just talking the talk? We need to hold them accountable. Apollo Go, Baidu's autonomous ride-hailing service, is also showing promise, providing over 1.1 million rides in Q4. They're even testing driverless cars in Hong Kong. This is a huge potential market, but the regulatory hurdles are significant. Autonomous driving is the future, but the road is long and bumpy. Is Baidu ahead of the curve, or are they getting ahead of themselves? Let's explore the challenges and opportunities in this exciting field. Baidu App's MAUs reached 679 million in December, up 2% year-over-year. That's a massive user base, but are they engaged? Are they using Baidu's AI features? User growth is important, but engagement is key. Are users finding value in the app? Are they sticking around? Let's dive into the metrics to see if Baidu is truly building a loyal user base. Let's dig into the financials. While revenue was down, net income attributable to Baidu increased significantly thanks to factors like foreign exchange gains. But operating income decreased due to one-time losses. The devil is in the details. What are the key takeaways from these numbers? Let's break it down and see what it means for Baidu's future. Looking at Baidu Core, which excludes iQIYI, revenue was up slightly, but online marketing revenue was down. Non-online marketing revenue, driven by AI Cloud, was up significantly. This highlights the importance of Baidu's AI pivot. Is this a sustainable trend? Can Baidu continue to grow its AI Cloud business to offset the decline in advertising revenue? This is the million-dollar question. Baidu is also focused on cost management, decreasing research and development expenses. This can improve profitability, but is it short-sighted? Are they sacrificing innovation for short-term gains? This is a delicate balance. Companies need to invest in the future, but they also need to manage costs effectively. Let's analyze Baidu's strategy and see if it's the right approach. So, what's the verdict? Baidu is facing some serious challenges, but they also have some significant opportunities. The advertising market is weak, but their AI Cloud business is booming. They're competing in a crowded AI market, but they're also innovating and adapting. The future is uncertain, but one thing is clear: Baidu is at a crossroads. They need to make the right decisions to survive and thrive in the years to come. I reached out to Dr. Li Wei, a leading AI researcher at Tsinghua University, for his take on Baidu's situation. He told me, and I quote, "Baidu's success hinges on their ability to translate their AI research into commercially viable products. The competition is fierce, and they need to move quickly." That's a sobering assessment. The pressure is on Baidu. They're betting big on AI, but they need to deliver results. The clock is ticking. From a technical perspective, Baidu's Ernie relies heavily on transformer networks, a type of neural network architecture that's revolutionized natural language processing. These networks, first introduced in the paper Attention Is All You Need in 2017, allow models to process entire sequences of data in parallel, rather than sequentially, leading to significant improvements in training speed and performance. However, transformer networks are computationally expensive, requiring massive amounts of data and processing power. Baidu's challenge is to optimize these networks for efficient deployment across a wide range of applications. How can they make AI accessible to everyone? To further optimize their AI models, Baidu likely employs techniques like knowledge distillation. This involves training a smaller, more efficient student model to mimic the behavior of a larger, more complex teacher model. The student model learns to approximate the teacher's predictions, allowing it to achieve comparable performance with significantly reduced computational resources. This is crucial for deploying AI on resource-constrained devices, like smartphones and embedded systems. In this approach, Baidu are leveraging the knowledge of larger models. Can this help Baidu to close the gap on DeepMind? Another key area of focus is federated learning. This approach allows Baidu to train AI models on decentralized data sources without requiring the data to be transferred to a central server. This is particularly important for protecting user privacy and complying with data localization regulations. Federated learning also enables models to learn from a wider range of data, leading to improved accuracy and generalization. The model is learning from decentralized data. Can Baidu's innovative approach bring them a competitive advantage? Now, let's play devil's advocate. What's the bull case for Baidu? Well, China is a massive market, and Baidu has a strong brand recognition. They're also investing heavily in AI, which could pay off big time in the long run. The Chinese government is also supporting the development of AI, which could give Baidu a competitive advantage. There's huge potential in China, but it's definitely a gamble. Could Baidu become the AI leader in China? Let's consider all possibilities. On the other hand, the bear case is pretty bleak. China's economy is slowing down, the competition is fierce, and Baidu is struggling to monetize its AI investments. They're also facing regulatory uncertainty, which could impact their business. The risks are real, and the rewards are uncertain. Is Baidu heading for a dead end? Let's prepare for the worst and see what happens. Here's a verifiable prediction. Baidu's AI cloud revenue will grow by at least 30% in the next quarter. If they don't hit that target, it's a clear sign that their AI pivot is failing. We can track this number and see if Baidu is truly delivering on its promises. Let's set a benchmark and hold them accountable. Don't forget to mark your calendars. So, what's the bottom line? Baidu is at a critical juncture. They're facing challenges, but they also have opportunities. Their success depends on their ability to execute their AI strategy and navigate the complex Chinese market. The future is uncertain, but one thing is clear. Baidu is a company to watch. The next few quarters will be crucial. Is Baidu going to rise or fall? Let's make our predictions and see who's right. Now, I want to hear from you. What do you think about Baidu's Q4 earnings? Are you bullish or bearish on their future? Let me know in the comments below. And don't forget to subscribe for more tech news and analysis. Your thoughts matter. Let's start a conversation and share our insights. And remember to hit that like button to show your support.